Today we are talking about debt, and to be more specific, we're talking about the US government's debt obligations that have a potential to default sometime in October. This has been all over the news, so if you have heard it and you're not sure what it's all about, stay tuned. In this video, we'll be discussing a little bit about what is happening right now. We'll touch on Warren Buffett, how he thinks that this shouldn't even be a problem whatsoever. And we'll talk about the significance, where the potential opportunity could come. So stay tuned for that. But if this is your first time here, my name's Nick. Welcome to Waste of Wealth. Huge favor, huge ask. If you learn something new or you get some value, hit that like button for me. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. I would greatly appreciate that. October 19th is the scheduled D-Day that the US government could potentially default on its debt for the first time ever. So let's break it down. Let's get an understanding as to what's going on. We'll go to the CNN business article right here about why October 19th could be a catastrophic day for the US economy. So this economy that has $28.4 trillion in debt is basically looking to raise the amount of bond purchases that the Fed can do so that they can use that money and use it to pay down the debt that's already accumulating. Essentially, what they're doing is they're getting another credit card to pay for the other credit card. Obviously, there's a little bit of a political back and forth right now. One party wants to spend, wants to get people back employed. The other party just wants to say, hold your horses. Let's figure things out. We've been already spending $3 trillion. I don't know if we can afford to spend any more. So obviously we see here that Yellen warned lawmakers this week that if Congress fails to raise or suspend the debt ceiling, the federal government will exhaust those extraordinary measures by October 18th. At that point, we expect the Treasury would be left with a very limited resources and they would be depleted quickly. So it's uncertain whether we would continue to meet all of the nation's commitments after that day. So they call it this X date here, but it's a best guess by the Treasury. It's not something that's in stone, and it could be a little bit before, it could be a little bit behind. Now, fact of the matter is that date is approaching very, very soon, and they should definitely figure out what the debt ceiling is going to be. Now, obviously, politics is getting in the way, but let's just take a look at maybe an example in the past where we've learned from this. So we see here that the Treasury secretaries have a long history of giving themselves wiggle room when it comes to announcing the X date, just in case Congress blows through that date. And that's what happened in 2011. Washington didn't default then, but it did delay the cost Americans its perfect credit rating from the S&P and rattle financial markets. Now, we'll be touching on this in a little bit, but we do see a little bit of volatility in the markets. I know there's so many different things going on, whether it's the 10-year yield or the trouble that's happening in China. There seems to be a couple different things that are rattling the markets right now, but this is definitely one of them. So they do say here, Mark Zandi, chief economist at Moodys Analytics, told CNN Wednesday that Yellen is likely being somewhat conservative. I wouldn't be surprised if it's a day or two later than the 18th. He's estimating the 20th. So again, it's in and around this. It's something that we need to figure out sooner rather than later. So we'll go on to this article here. We'll figure out a little bit more behind the debt ceiling. So the US has never defaulted on its debt obligations and has raised or suspended the debt limit 78 times since 1960. And the possibility of a default could be catastrophic to the global economy. So basically, S&P downgraded the country's credit, like we saw in the last article, from a AAA to a AA+. Now, this sent three major U.S. stock indexes tumbling in the days that follows. And this is kind of what I was talking about before, about an opportunity to maybe put some dry powder, some cash that you have on the side into the market, into the names that you know are going to exist in 10 years, and not only exist, but obviously churn a profitable business. So this could actually be a great opportunity for us to put some money that has been sitting on the sidelines to work. So stay tuned, build up a watch list of companies that you love, and just continue to watch the price movement. Obviously, October 18th, 20th, whatever day they say is coming up relatively soon. So we should see some more volatility come. That's definitely what we're seeing. Now, let's get on to what the GOAT, Warren Buffett, has to say about it. So in 2011, Buffett said the recurring negotiations over the ceiling and threats of default were both unnecessary and time consuming. It's just such a waste of time for a country that's got a lot of things to do. I'd love to see them eliminate the idea, because it results in these periodic stalemate operations where everybody uses it for posturing purposes. And I think what he means by this is the political games that go back and forth. Now, there's no doubt in my mind that they don't want to see the US default for the first time ever in history. This is obviously just my opinion. There's a big stalemate going on, not only with the infrastructure bill, but they almost threatened to close the government down. There is a lot of stuff going on, but I definitely see this as short-term volatility, especially if you're buying in for 10 years. So like I said, build that watch list. Make sure that they're companies that make money, are going to make money, and you use them. That's always my favorite thing, is that if you use that company, definitely buy into that company. And let's just finish the video off here, taking a look at what the US debt looks like right now as of Friday as I film this. $28.8 trillion of debt. Absolutely incredible, the whole debt society that we live in today. It'll be interesting if this ever cracks, but I guess it's just the way that it is right now, and you gotta roll with the flow. But if you're still with me, I hope you enjoyed the video. Make sure to hit that like button. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. I hope you all have a great week in the markets. Happy trading.